Good day, everyone, and welcome to today's class. And today we'll be talking about accounting for what? Accounting for cash transaction. Accounting for cash transaction. Maybe during our previous class, we'll be able to talk about how we can pose transaction in a ledger. And the process of recording transaction, post recording of transaction in ledger, that is what we call bookkeeping. Bookkeeping is about recording transaction in ledger. So, and let me also refer to some of the things that I make mention in the previous class as well. That we have 5 elements of financial statement. I've been saying this since the beginning of this class, and I have a reason for that, because this is everything that we'll be talking about in our previous class now is the building block in accounting that you have to understand very well. So we say that we have 5 elements of financial statement. That is, every transaction that you see in financial statement, we can categorize it into what? We can categorize it into 5. There are some, we have one called we have asset, we have liability, we have equity, we have expenses, and we also have income. And we also make mention of the way you treat asset and expenses, they are the same. If your asset is increasing, if your expenses is increasing, what are you going to do? You are going to debit that particular You are going to debit that particular ledger. And if they are reducing, you are going to do what? You are going to credit it. So if your equity, if your liability, if your income, if they are increasing now, you are going to credit you are going to credit that particular ledger. And if they are reducing, you do what? You debit. So for every transaction, there will always be twofold. That's what we call the duality concept. That is the rule of double entry. For every credit, there must be a corresponding debit. If you debit one particular ledger, you are going to credit another ledger. Every accounting transaction is going to have a twofold. You debit one and you also credit one as well. So one of the main things that you have to try as much as possible to do at this level is to recognize them. That, this particular transaction now is referring to what? Or what do you do? You have to understand the nature of that transaction. On 31st of December, what do you do? On 2nd of January, what do you do? Do you buy something? So if you bought something, and how do you make the payment? Do you make the payment through cash? Do you make the payment using your bank? Or you are yet to pay? So if you are yet to pay now, that means that you are owing someone. And those that you are owing, that is what we call trade payable. We call it, the other name, we call it creditors. That is those that the organization is owing. So your customer can also bought something from you as well, and they have not paid. They have not paid. So those that are those people, those customers, those transactions that you enter, but they have not paid the organization. Those people that is owing that is owing the organization, those individual, whether it is organization, those that we perform some certain service for them, we sold some goods to them, but they have yet to pay us. Those are what we call trade receivable, and it is assets. They will eventually pay one day. So you have to understand you have to understand the nature of the transaction. So once you understand the nature of the transaction, then the next thing that you have to try as much as possible to do is that which account are you going to debit? Which one are you going to credit? All right. So what is our learning objective for today? Because what we are talking about today is accounting for cash transaction. We have talked about we have been talking about cash book before. So we'll be drawing more on cash book today as well. what at the end of this, at the end of this class, you should be able to understand why do we need to control our cash. It's very, very important, whether as individual, as organization, you need to control your cash. It's very important. Know the basic requirement for internal control over cash. Distinguish between what do we refer to as a word as a trade discount and what do we refer to as a word as a cash discount. Trade discount is to encourage you to buy in bulk. Trade discount is to encourage you to buy in bulk. Cash discount is to encourage you to make payment as soon as possible. Cash discount is for what? Is for prompt payments. Trade discount is for you should buy in what? In bulk. Buy like 50 carton. But cash discount is for you to pay as soon as possible. If you're able to pay within 5 days, we are going to give you a cash discount. Then know the word, then know the uses of words. Petty cash. We'll also be talking about what petty cash as well. The importance of what and we operate petty cash in what? In using Impress system. How to prepare what 2 or what 3-column cash book, and how you can do some analysis of your cash book. So what is cash? Cash is defined to include what? Check, money order, coins, and paper money that a bank will accept. That a bank will accept for what? For immediate deposit from a customer. Cash is what? Cash is asset. Most to loss through what? Through theft and other means. So cash is what? Your cash is your asset. If you have what? If you have 1,000 naira with you now, is your what? Is your asset. If you have 1,000 naira in your bank now, is your what? Is your asset. And cash is very what? Is very prone to what? For theft. To theft. Oh, you can be what? You can be walking now, and the 1,000 naira that you have with you now, you are going to what? You are going to misplace it. The 1,000 Ghana CD that you have now, you are going to misplace it. The dollar that you have with you now, you can misplace it as well. So it's very prone to what? It's very prone to theft. And that's why majority of the central bank in most countries they are trying to encourage what? The cashless policy. All right. So why do we need to control our cash? Why? A good internal control over cash will help management to achieve the following objective. That is, why do you need to control it? What is the objective that, if you're able to manage your cash very well, if you're able to have a good control over your cash, is going to help a lot. There will be accurate accounting for what? For transaction. There will be accurate accounting for what? For transaction. So accurate in terms of what? If you want to keep your accounting record, it will be very, very easy. If you're able to have a good control. Management will maintain adequate amount of cash at all time. So once you're able to how much do you need? Starting from from tomorrow now, from Monday to Friday. I need I need 10,000 naira I need 10,000 naira cash. So management will be able to maintain adequate amount of cash at all time. To run our operation from this this. This is the amount of this is the amount of cash that we need. Management will not only maintain adequate amount of cash at all time, they will also be able to invest idle cash, reveal in profitable ventures. So it's not only about to maintain cash. Excess cash sometimes is not good. So you have to try as much as possible to keep it at optimal level. So whenever there's whenever you have some excess cash, you can invest in you can invest your excess cash in in a profitable ventures. So once you discover that you have some excess cash, is not cash is not something that you try as much as possible to have a large amount of them. Once this excess, how much do you need during this week to run our operation for this month? You need 100,000. So the next thing, as you are carrying out your activities, maybe there's you have recognized that I need 100, but at the end of the day maybe you spend less than that. So the excess that is what now, the excess that is left now, you can invest it in the what, in the profitable ventures. So rather than still keeping it in your organization. It what? It will prevent losses of cash. It will prevent what? Losses of cash from fraud or theft. Because sometimes if you don't have control over your cash and you have excess cash, then it's going to lead to what? It's going to lead to fraud or what? Or theft. But if you control your cash very well, you're able to know, oh, this is the amount of what? This is the amount of cash that you need, and you're able to safeguard them. It will prevent what? To prevent fraud. If you know that, oh, you don't need what? You don't need up to 100,000 naira. So why are you withdrawing it from the ATM? Temptation to embezzle idle cash from staff is what is avoided in terms of what? Have a what? Maybe you have a what? You have a safe that you're going to be keeping the cash that you're going to be using in the organization. And there's a password attached to it. If you don't have the password, you can't open it. So those are what? Having a what? Having a safe is also a what? Is also a way you can what? You can control your cash. So rather than putting it on your what, on your decks now, there's a safe that you can what, that you can put in, and before you open it, it requires what? A password. If you don't have the password, you can't open it. So temptation to what? To embezzle idle cash by staff will be what? Will be avoided. So these are some of the what? These are some of the reasons why we need to have a what? A good control, a good internal control over our over cash. You can see cash is very what? Is very, very important. Is important, but it should not be what? It should not be excess. Because if it is what? If you have a large amount of excess cash, it can lead to what? Some of these things. So how to handle what? How to handle cash, how to handle cash in order to have a good internal control over cash. That is, how can you handle your cash so that you're able to have a good internal control, so that you're able to achieve what? So that you're able to achieve this objective. How can you do it? How can you do it to have a good, how can you do it so that you're able to achieve this objective? Because these are the objective of what? Of having a good control over your what? Over your cash. But what are the some of the things that you need to do so that you're able to achieve this objective? What are some of the things that you need to do so that you're able to what? So that you're able to achieve this objective that you're looking at now? So these are some of the things that you need to do. These are some of the steps that you need to take. Cash should be deposited daily in the what? In the bank. Every sales, every cash sales, at the end of the world, at the end of the day, you have to take it to the bank. You should not wait for the world. You should not wait for the next day. Every cash transaction have to be taken to the bank within the world before the next 24 hours. The cash sales of today, take it to the bank. Don't keep it in your word, in the store, in the shelf. Anybody can come at any time. So cash should be deposited daily in the what? In the bank. All payment, except for what? For petty cash transactions, should be made by check. Every payment should be made by what? Should be made by check, so that it will be very, very easy to account for. So if every payment is made by check, so if I want to post any transaction, the only thing that I'm relying on, oh, let me just have the bank statement, or let me have the what? The checkbook. Because there will always be a what? There will always be a copy of it. So it will be very, very easy. So the only cash that we have in the organization is the petty cash. Every payment is through the what? Is through the check. The function of what? The function of receiving cash should be separated from that of what? Maintaining record of what? Cash. Each function should be performed by different person. Okay, so what we are talking about in the world in this step 3 is that those that is receiving the cash should be different from those that is recording. I hope that is clear, my people. Those that is what? Those that is receiving the cash should be what? Should be different from those that is what? That is making the word, that is making the record. There should be a word, a separation of word. There should be a separation of employee. There should be a division of labor in this way. Those that is receiving the cash from the customer should be different from those that is maintaining the record. Those that is receiving the cash should be what? Should be different from those that is maintaining the what? That is maintaining the record. Okay? So that what? So that we're able to avoid collusion of what? Employee. All cash received should be recorded in the what? In the cash register. All cash received should be recorded in what? In the cash register. At the end of what? At the end of this, at the end of each day, the amount in the what? In the register should be compared with the physical cash. All cash received should be recorded in the what? In the cash register. Oh, you receive what on file? You receive cash of what? In the morning, let's say around 8 o'clock in the morning. Oh, I receive what? I receive 8,000 naira from this what? From this particular customer. In the afternoon, I receive this 10,000 naira. In this particular amount, I receive what? $50,000. In this what? In this particular time of the day, I receive what? 10,000 Ghana cedis. So all what? All cash transaction, all cash received should be recorded in the cash register. Oh, at the end of the day, my records show that, oh, we receive a cash of what? We receive a cash of what? 100,000. 100 what? 100,000. So then we have to compare with what? We have to compare with the physical cash that is available, comparing our record with the physical cash available. If you are doing that, you're able to achieve what? We're able to achieve this objective. This is the objective. So how can we now achieve this objective? These are some of the things that you need to do in terms of what? How can you pass your exam? How can you pass your exam? So these are how you can pass your exam. These are the steps that we are talking about. How can you achieve this word? How can you achieve this objective? These are the objectives. So how can you now achieve this objective? Attend class, attend a good tutorial center. Whatever the task that is given to you by the lecturer, make sure that you do it. If there's any area that you don't understand, always make it an habit to ask questions. Number 5, all payments should be checked and approved in writing by the responsible officer before what payments are made. Before payment are made. All payments should be checked. All payments should be checked and approved. Yeah. All payments should be checked. Check it. And there should be someone that will approve it. There should be someone that will raise the payment. There should be someone that will approve it. Oh, I'm working in account department. Oh, I want us to pay this particular supplier for what? For some of the goods that we bought from this particular supplier. So I'm the one that is raising the payment voucher now. So there should be someone that will make that will approve it. So it's just like separation of employee in this way as well. So there should be someone that will raise the payment and there should be someone that will approve it. I can raise the payment and the management may not yet approve it. Function of approving payment should be separated from the function of signing check. You can see it as well. This is what I'm trying to explain. The function of approving payment should be different, should be separated from function of signing check. Those that approve it, go ahead, should not be the person that will also sign the check as well. It should be different. Okay? The function of approving payment, approve this payment, should be separated from function of signing the check. The finance manager can approve payment. It will be one of the accounting officers that the finance the function of approving payment, maybe it's the finance manager that will approve the payment, should be separated from function of signing the check. Maybe it will be the CEO or other senior management that will sign the check. Carbonized receipt should be issued for all cash sales and cash receipts. When payment is made for transaction, the invoice and other supporting documents relating to that transaction should be stamped paid with the date so that the payment will not be made for a transaction price. So all all evidence. What is we give you a purchase order what is the can you give us the delivery notes, check it that, oh, what we requested for, is that what you supply? So all documents should be what should be attached to it, so that it will what this one, it will eliminate what making payment twice to on the same what document. All right. So if you are doing this, if you are doing, these are some of the steps that if you are doing it, it will what? And please, these are what it will be able to achieve this objective. As you're looking at this, if you check some of your work, some of your past questions, this has been what this has been tested before. What are the what? How can you add your cash in order to have a good internal control? What are the what? What are the steps? The fall. What are the steps that you need to take in order to achieve this what this objective? There will be accurate accounting for cash transaction. How can you achieve this objective? These are some of the steps that you need to take. So please, these first slides and what this second, they are very, very important. The objective and the what and the step. All right. Let's look at what are some of the what definition of terms, what relating to cash transaction. We have what we call what a voucher system. A voucher system. A voucher system involves a written authorization called a what? A voucher that is prepared for for every cash payment transaction. There has to be a what? A voucher. That's what we call a what? A vouching system. It requires that every transaction should be verified, should be approved, and should be recorded before payment is what is made. That is the voucher system. It is a process that what that require what you have to verify, you have to approve, you have to record the what. You have to what and record it before payment is made. What is now a voucher? A voucher is a written authorization used in approving a transaction for payment. That is a what? A voucher. What are some of the characteristics? What are some of the features of a voucher? A voucher will have what? A voucher will have a date. And hold on, if I can what? If I can show you so that you are going to see it. Voucher. Voucher. So if you look at this image, I should be able to see a voucher. I want to show you some of the characteristics of what, voucher. This is what this is a payment voucher now. This is a payment voucher. Is it clear enough? If I can download this. Okay, as you can see now, we have a PV number. It's going to have what? It's going to have a number. Every voucher it will be arranged serially. It will have the amount both in figures and in word. The date has to be what? The date has to be written as well. All right. You have to tell us the purpose of it. Let me download this. Okay, hold on, please. Okay, save image. Hold on, please. So you can see it will have what? It will have the number, it will have the date, it will have the what, it will have the amount, it will have the cash, it will have who is checking it, it will have to who are we paying it to? Oh, we are paying it to Mr. James, we are paying it to Mr. John. The sum in terms of what is how much it's been for what are you preparing it for? Why? All right, is approved by who approved it? Paid by, and you have to what if the signature is also going to be what the so the signature is also going to be there. So this is the essential characteristics of a voucher. A voucher will have what? It will have a number, it will have the amount in figures, and in what it will have who prepared it, to who are we paying it to, what is the reason that we are making the payment. All right. Okay. We also have a voucher what we also have a voucher register. This is a reward, this is a special what permanent record for all payments. A permanent record for, don't worry, very soon we'll also be talking about what asset what register. Like for example, I don't know if you have what maybe you have some of these experience before. Let's say you are in a certain organization and you are called to what this is like the olden way that okay you have to maybe for example now some of your customer is what they are here to pay. So what you do now is that you have to go to the organization to collect the check. Then they also have a register. A register, okay, as we are giving you the what, as we are giving you the check as well, you also write some things down. Oh, I have received it. You write your name, the means of identification that you want that you have as well. You also that will also be so there's a register, just like a book. So let me put it in that. It's just like a book, and the name or the PV number of the voucher will be there. Who are we paying it to? The amount and who as the receiving officer as well. So for example, now if there's a payment and on behalf of our IoT now. So now there's going to be a word register. So if IoT is what is coming to my organization now to collect a certain amount of money, so, and I'm what, let's say I'm issuing a check to them. And one of the employee of what ICAN online and is now coming to my organization to collect the check. There's a register that, oh, as I'm giving this particular check to this particular employee of ICAN online, is going to write some things down. Okay, what is your name, the means of identification? So you have to show me your what, if you are the employee of that organization. Okay, can you show me your ID card? Something like that. That's a register. This is a special permanent record for all payments. So we can have in a separate register for for each year. We can have a separate register for month or quarterly as well. It depends on the volume of transaction in that organization. So what are some of the things that this voucher register is going to make mention of? The future, the reference, it will show the date of the payments, the payee, the purpose of the payment, the voucher number, and the amount. And let me see if I can if I can see this as well. Hold on, please. Okay. Which can I use? A voucher register for a payroll. It's just hold on, so that you are going to see how it actually works. Okay, let me check this. Voucher register. This the amount is not really. Okay. Okay. Okay, this one is a check register. Okay, it also looks like a voucher register. As we can see, it have the date, the check number. So we can this particular side can be for the PV number, just like the payment voucher number. It will be what it should be there. The payee maybe, for example, maybe this one is for what is for payroll. Trumping what licensing. That is the name of the word. Who is who are we paying it to? The amount, you can see the amount is also there. And these are what they say what purchase description, cash what. This one doesn't look very well. Don't worry, I can still see another one later in the day. So we also have another term called what, cash over or short. Cash over or short. This is the account in which error in making change to cash customer should be recorded. And okay, don't worry, very soon, just hold on with this. There's a question that we are going to solve now that you are going to see some of these things I'm explaining as well. So it will be good in that way. Discount, a very short one. And I think like I've explained earlier, when we say what trade discount, trade discount is it's an allowance in form of what percentage reduction in the full invoice price made to a customer. And one of the reasons why we have it, and in accounting, have it at the back of your mind that we don't record what trade discounts. Don't worry, when we are preparing what 3-column cash book now, we can be coming across some certain question whereby there's going to be a trade discount. We don't record what trade discount. There's no accounting there's no accounting record for trade discount. So, but why do we have to? Why are we having a trade discount? What trade discount is for? What is to encourage bulk purchase. What is quantity discount? Quantity discount is similar to a reduction in a price given to a customer who buy in large quantity. Even there are some texts that will say that okay, in cash book like this, that we only have two type of we only have two type of discount. It's either it is trade, or it is cash. But because quantity discount and trade discount have the same they both have the same characteristic. There's similarity between two of them. But cash discount is entirely different. Cash discount is just to encourage prompt payments. That if you make a payment within so days, I'm going to give you I'm going to give you a certain I'm going to give you a certain discount. That is cash. Cash discount, it doesn't take consideration of how many quantity do you buy. Trade discount and quantity take consideration of how many carton do you buy? How many units of this particular item do you buy? But cash discount is just to encourage you that, you have to pay as soon as possible. That, if you pay within this certain days, then I'm going to give you there's going to be a discount that will be given to you. So look at this illustration that we have here. Let's say Appiah Enterprises sold goods to Sule Venture for 250,000. A trade discount is a trade discount of 10% was granted, and a cash discount of 5% if payment is made within 60 days. For this thing, there's usually a condition attached to trade discount and cash discount. Trade discount, please have it at the back of your mind, is for is to encourage you to buy in bulk. But cash discount, there are some transactions that will qualify for trade discount, but they will not qualify for cash transaction, for cash discount. And look at this question that will be looking at now. Let me show you something now, so that as I'm saying it, you also be looking at. Look at this. Look at this particular word. Just look at this particular paragraph now. They say all sales with cash payment will be given 5% discount, and all sales above 500,000 will qualify for a trade discount at at 10%. That is the instruction now. So look at this particular transaction now on January 8th. Sold goods for cash to Sanders Limited for how much? For 340,000. You can see now this particular transaction qualify for This qualify for cash discount. But look at the second one now. On January 10th, he sold goods to Mines and Stone Limited for For 1 million naira, who paid 75% of the amount by check. This now, it does not qualify for It does not qualify for cash It doesn't qualify for cash discount. Cash discount is for full cash payment. You can see it is it is clear. So these are some of the words we are going to be solving this question today by God's grace. You can see now that this particular the first transaction qualify for for cash discount, but it does not qualify for for trade discount. But the second one now qualify for The second one qualify for for trade discount, but not it does not qualify for It does not qualify for qualify for cash discount. All right. So let's go back a little bit. So now look at this example that we're talking about. So you can see now that the instruction is what? The instruction is clear. So now, if payment is what is made within 60 days was what was allowed. So that means that if we made a payment within if we made a payment within 60 days, we are going to give you a cash we are going to give you a cash discount. So now you are now required to calculate the net sales value, the cash discount, and the amount received by Appian Enterprise if we paid if we paid within if we made a payment within if we made a payment within 60 days. All right. So now, hold on, please. This is what we are going to use. Okay, so let's what is the question saying again? So now you can see now you sold goods for how much? For 250 what? For 250,000. And a trade discount of how much? A trade discount of 10% will be what? A trade discount of 10% will be given. So, and it's also qualified, this particular transaction also qualify for what? Is also qualified for cash, or it's also qualified for cash discount. But you are only going to enjoy this if if you made a payment within So let's even and the question clearly stated, let's assume that you made a payment within made a payment within 60 days. So so first of all now, let's calculate okay, sorry, let me go back to the question. What was the first requirement of the question? First requirement say that calculate the net sales value. Calculate the net sales the net sales value. Calculate the net sales value. All right. So we are going to let's calculate A now. Net sales net sales value. All right. So what we first of all need to do now is that what is the invoice price? And the invoice price is what? The invoice price is 250. The invoice price. You have to always try as much as possible, include include the unit of always include your unit of measurement. If it is in is in Ghana cedi, if it's in Nigerian naira, whatever the currency that is mentioned in in the question, just follow it. Then first of all, what we just need to do now is try as much. We need to less the less it needs to less trade discount. And the percentage of the percentage of trade discount is it will be the 10% of the invoice price, and the invoice price is the invoice price is is 250. So we are going to and we say 10 divided by 100 multiplied by 250,000, that would be that would be 25 that would be 25,000. So 250,000 minus 250,000 minus 25,000, that would be 225. That will be 224. So this is the what? This is the first requirement, which is the what? The net sales value. The net sales value. We are still going to come across this question that we are going to do something like this as well in the question that we are going to solve after this now. So the net sales value is the what? Is the invoice price, or sometimes we call it the what? The listed price, less what? You are going to less the what? The trade discount, and the trade discount is clearly stated, which is what? Which is 10 what? Which is 10% of the invoice price. Okay, so let's now assume now that, which is the second requirement, what about if we pay in the what? In 60 days? Okay, and if we pay in what? In 60 days, we are told that what is going to enjoy what is the discount for if you made a payment within what? If you made a payment, and what? 5% cash discount if you made a payment within what? 60 what? 60 days. If you made a payment within what? 60 days. So let's do. So we already have our what? We already have our. What is this? We already have our what? Our net sales. Our net sales value. And our net sales value is how much? Our net sales value is 2 to what? Is 2 to 5,000. So the next thing that I'm going to do now is to less the what? Is to less the what? The cash what? The cash discount that is given. The cash discount, and which is what? It is 5%. So we are still going to say 5 divided by what? 100. Then we are going to multiply with what? With 2 to 5 what? 2 to 5,000. And that would be 11 something. That's what. Let's check. That would be 11,000. I think 11,250. Okay. 11,000 what? 11,250. So 225 minus 11,000 what? 250. So that would be 213, right? 213. Then that would be what? 7 what? That would be 750. So this is going to be the what? The amount that we are going to receive. Amount that we are going to receive from the what? Amount to receive from the customer. All right. So there is it. So that is it regarding this. So the first one is just the what? Just to what is the net sales? You remove the what? You remove the trade what? You are going to remove the trade discount. What is the invoice price? The invoice price is what? The invoice price is 250,000. What you are going to do now is to less the what? Is to less the credit what? Is to less the trade discount. All right. So let's what? Let's continue. It's a very straightforward example. So this is what this is the format of what? Of cash book. What we have been using to what we are used to, like in the what in the previous class, is sorry, what we are used to is single what? Is a single cash book. All right, but now this is a what? The yellow font. This is a what? A 2-column what? A 2-column cash book. And if you look at it, look at the words, look at the layout. We are going to have dates. We are going to have what? Particular, or sometimes we call it what? Details. We have failure. We are going to have what? A discount allow. We have cash. We have bank. This is what? This is the debit side, and this is what as well? This is the credit side. The only difference between what? The one in yellow now, this is a what? This is a 3-column cash book. And this is a what? This is a 2-column what? This is a 2-column cash book. The only difference between the two is that what is discount. In 2-column cash book, there is no what? There is no discount. But in 3-column, we have what? Discount. We have what we call discount allow, and we also have what discount what receive. And I think I've explained is what is meaning of discount allow and discount receive in our previous class as well. When we say discount allow, it is what? It is the organization that is giving it to the customer. So in this word, in this organization, if I can online give you a word, a certain discount now, and discount allow is a word, is expenses to the word, to the organization. We are going to debit the word, we are going to debit the POL. But discount receive is the one that you receive from your word, from your supplier. So if your supplier is also giving you a word, if your supplier is also giving you a discount, maybe as a result of bulk purchase or whatever it is, that is what discount receive. Discount allow is given by the word, the organization to what? To customer. Discount receive is that the organization will receive it from our what? We receive it from our supplier. All right. So what is now the difference between the word, the 2-column and 3-column is about what? Discount. In 2-column cash book, there's no what? There's no discount. But in 3-column, we have what? Discount. All right. And that's why we call it what? 3-column, cash, bank, and what? Discount. Cash, bank, and what? Discount. That's why we call it what? 3-column. But in 2-column, we only have what? Cash and what? Bank. All right. Then another terms that we also need to explain now is what we call what? Contra entry. And when we say what? Contra entry is a word. Contra entry, when we even say contra, a contract is a word, is a Latin word. Are you with me? When you hear contract is a word, contract is a Latin word, which shows cash has been withdrawn from what? The cash has been withdrawn from the office and deposited into the what? Into the bank. Let me come again. I say contract is a word. When you hear contract is a word, it's a Latin word, which means that cash has been withdrawn from the word, from the office and deposited into the word, into the bank. Or cash has been withdrawn from the bank and deposited in the word, in the cash. You withdraw a word, you withdraw a certain amount in your word, you withdraw a certain amount in your bank now, and you are using it for what? You take it to your word, to your cash, you are using it for office use. That is a word. That is a contract. Contra entry in relation to cash book, contra refers to what? Either the word, the lodgement of cash into the bank, or withdrawal of what? Cash from the word, from the bank for what? For office use. The complete double entry is done simultaneously in the what? In the cash book. The letter C is used to indicate this in the what? In the field column of the word of the cash book on the date of what? On the date of transaction. So you can see here. Okay, do you have anyone here? So you can see in this field, look at what? Look at in this 3-column now. You can see May 28th cash. You can see it here. We have C. We use this C to represent what? We use this C to represent contract. And you're also going to see it in the what? In the credit side as well. You can see May 28th in both the two sides, in the debit and the what? And the credit. We have it here. You can see here, we credit the what? We credit what? Let me look at it very well. We credit the what? The cash. We credit cash and we debit bank. So that means that the money is what we withdraw from the bank, from our what? From our cash, and we take it to the what? We take it to the bank. That is it. So it's still our what? It's still our money now. So you can see May 28th, this C, we use it to represent what? We use it to represent contract. All right. So that's what, let's do a brief recap. Then we're now going to go to the practice. We'll go to the practice question now. We talk about cash, and then we also talk about so what are some of the objective that if you have a good control over your cash that you are going to achieve. What are some of the objective? All right. The objective is what? There will be accurate accounting for cash transaction. Management will be able to maintain adequate amount of cash at all times. So how can you achieve this objective? How can you achieve this objective? These are some of the steps that you need to take in order to achieve this objective. Cash should be deposited daily in the bank. All cash sales in today, we have to take it to the bank today. All payment except for petty cash should be what? Should be made by check. It will be very, very easy to do some accounting function as well. All right. We talk about some of the terms, the vouching system, voucher, register, cash, or overshot. We talk about discount, the trade, the quantity, and the what, and the cash discount. And we do a what? I think we do a little illustration that you can see here as well. Um, this is the what, this is the invoice price, and you less the what, the trade discount, this is what. Then you're also giving this customer, if you're able to pay what within 60 days, if you're able to pay within 60 days, then we also less the what, the cash discount as well. All right. So this is a format for what, 2 column and what, and 3 column. Then we also explain what's the word contract. Contract is the word, is the Latin word, which means that you want to take some money from your bank and you deposit it in what's into your cash account. So we are going to be looking about question 44 from our word, from our general word, from our general practice word, from our general practice question. And I'm going to use this question to also what, I think during the last class we do what, accounting equation and what, and ledger. So today is going to be the what, today is going to be the final day. So this particular question now, we are going to use it to solve for what, for 3 column. We are going to use it to what, a ledger as well, and we also what, we also extract what, we're also going to extract a what, a trial balance from these as well. All right. And I think during the previous class, what we focus on is on what, is on ledger as well. So if there's also time today, once we are through with the word, with the 3 column, we'll also what, we'll also post in the ledger, and if there's time as well, we'll also extract in the what, in the trial balance. Like I told you in the what, in the previous class, once our ledger is correct, trial balance is just to do what? Trial balance is just to do classification. Oh, if it is assets, put it in the what, in the debit side. If it is expenses, put it in the debit side. If it is what, equity, your liability, your what, your income, put it in what, in the credit side. So once your ledger is what, is correct, your trial balance will also what, it will also agree. All right. So now let's start with this what, let's start with this question now. All right. On January 1, 2016, Mr. Wally commenced a business as a what, as a sole trader with 10 million what, with 10 million naira, which he had paid into the what, into the business bank account. He purchased a van of what, of 6 million from what, Malam Tanko, and paid half of the what, half of the amount due by what, due by check on January what, January 2. The following what, the following transaction took place in the month of what, in the month of January 20 what, 2016. All right. So this is a what, this is a sole trader. The name of this what is Mr. What is Mr. It's Mr. Wally. It's Mr. What is Mr. Wally. And he started this business with how much? He started this business with how much? With 10 what? He started this with 10 million naira. He started this business with what? With 10 million naira. And that is what, that is like the what, the capital now that he what he started with. So now we can now what now? We can now go now. So first of all, I've prepared it in form of what, Excel sheet. So we just need to what, just need to be posting what's in this. So don't write anything in all the what, the Word file will also be what, will also be shared with you. So just listen to what I'm doing. All right. Just what, I just need your what, I just need your maximum what, attention. So this is what, this is a format. Please have some words and use some seconds to what, to please look at this. So we can now what, we can now start now. We can now what, we can now start now. Okay, let's start now. So now what was the what, what was the first word? What was the first on January what? On January 1, it commenced business as a word. It commenced business as a word, as a sole trader. It commenced business as a word, as a sole trader. So Let me first, and how did he introduce the money? He commenced business as a sole trader with 10 million naira, which he paid into the world, into the business bank account. So that means that the 10 million now is what is coming in. And if your asset is increasing, what are you going to do? If your asset is increasing, you are going to do what? If your asset is increasing, you are going to debit. So I'm going to say now, write the word, the date. The date is what? January what? January 1. So you just say what? You can maintain what? You can just write here on January, on what year, so that it will be very, we can make it somehow easy. In 20 what? In 2016, right? In 20 what? In 2016. So just say January 20 what? January 2016. All right. So I cannot say what? One now is relating to what? Capital. It's bringing what? It's bringing in the word a capital. Is bringing in what? A capital. So you are going to write the word capital. So introduce a capital into the what? Into the business now. And he introduced this word, he introduced this particular payment via the what? Via the bank. So the 10 word, your unit of measurement, the word, the naira sign, just bring the word, the 10 million naira here. All right, so that's for the word, that is for the first day. Then we also need to look about the word in the opening paragraph as well. For 10 million, he paid into the business word bank account. You can see the reason why I'm bringing the word, the 10 word, the 10 million naira under the word, under the bank now, is as a result of what? Is introducing the money via the word, the bank. Assuming that it is in what? In cash, it will be what? It will be here. All right. So the next one, you say he purchased the what? He purchased a van of what? 6 million from what? From Malam Tanko, and paid half of the amount due by what? Due by check on what? On January to 2016. So that means now that what? Once you hear what check, it means the word bank. Once you hear what check, it means what? Bank. Please don't forget. Check, it means what? We are referring to what? We are referring to bank. So what I'm now going to, is making payment. So that means that what? You have what? 10 million in your bank account, and you what? You purchase a what? A motor van of how much? Of 6 million, but you paid half of it. So that means that you are owing the guy extra what? Extra 3 million now. So since money is going out, if your asset account is what? Is reducing, what are you going to do? If your asset account is reducing, you are going to what? You are going to credit, because your bank is reducing now. So if your bank is reducing, you credit. So we are going to say date now. So let me also bring it here as well. Copy this, and I'll also maintain this one as well. And put the word, the naira sign here, naira sign here, and the naira sign here as well. All right. So on what? On 2 now, I just need to write the word. I need to write the name of the word, the supplier, which is what? Malam what? Malam Tanko. So, and how do you make the payment? How do you make the payment? You pay via the what? Via the bank as well, which is you pay what? 3 million. All right. So that is that. Then we need to go to the word. Let's move on. Let's move on. No time. Then on what? On January 3rd, paid rent of what? 500,000 for 2 years in advance for business premises by what? By check. I informed you before. Once we heard about what? Once we heard about check, it means that we are referring to what? We are referring to bank. So he paid rent. No money is going out. Please don't forget. Once money is going out, you do what? You credit. Once your asset is reducing, you credit. Once your asset is reducing, you credit. If money is coming in, you debit. If money is coming in, you debit. If money is going out, you credit. So on what? 2 now. 2 as well. You can say what? Rent. Pay the what? a rent of how much, like, which is paid a rent of 500,000. All right, so that is all. As simple as that. It's a very simple topic. So we are through with what we are through with this. On 3 now, purchase goods worth how much? Purchase goods worth 2 million what? Purchase goods worth 2 million naira from what? Granules Limited, and paid half of the what? And paid half of the amount. And paid half of the what? And pay half of the amount by what? By and pay half of the amount by check. So as to enjoy a what? A cash discount of how much? So as to enjoy a cash discount of what? A cash discount of 4%. So let's not do a what? Let's calculate the what? Let's calculate the discount now. Let's calculate the what? Let's calculate the discount now. Let's calculate the what? Let's calculate the discount now. So for question what now? So let me just underline this. Let me underline this. So we want to calculate the what? We want to calculate the discount on what? On January what now? On January 3. On January what? 3. So and this one now we say we want to enjoy what? 4%. Well, you are giving us 4% discount. So 4 divided by what? 100. Then we are going to multiply with what? The amount, which is what? 2 million. Which is 2 million. Which is what? Which is 2 million. So we are doing this so that we're able to enjoy a what? A cash what? A cash discount. A cash discount. And if you say what? 4 divided by 100 multiplied by what? Multiplied by 2 million. That will give you what? That will give you 80 what? 80,000. You're going to have what? 80 what? 80,000 naira. So how much are we going to pay now? Because we want to enjoy what? A discount. So that means that what we are paying now, it will now be what? What is the invoice price? The invoice price is what? Just like what we do here. The invoice price is what? Is 2 million. Then you less what? Less the 80. That will give you what? That will give you 9 what? 920. Then so that means that the what? The original amount that you need to pay now is what? Is 920. Look at this. A 2 million from grant and paid half of the amount by check so as to enjoy a what? So as to enjoy a discount of what? Of 4%. So as to enjoy a what? A discount of 4% now. So that means that the original amount that you're paying is what? 1.9 what? 1.9 million. And you paid what? You paid half of it. You paid what? So if you divide this by what? By 2 now, how much are we going to have? So that would be what? 960. So if you what? If you say 1,000 what? 1,920 divided by what? By 2. That will give you what? That will give you 960. So that means that what we are going to record now, it will be what? It will be 960. What we are going to record now is so we have what now? We have on the third, that is on the third. So you can write the word is a payable, right? Just say trade what? Trade payable, because we are still owing. We are still owing. We have not yet made the word. We have not yet made the word the full payment. We have not yet made. So write the name of the word of the supplier, which is what? Let me check it. What's the name of the word? What's the name of the supplier? Name of the supplier is Granules World Limited. All right. All right. So yes. We paid how much now? we paid what? We are still going to pay through the bank, which is what? 960 what? 960,000. We're going to pay 960,000. Then you're not going to record what? You're not going to record the discount of what? 80,000 now. So that is that. So you can see, how do we calculate the what? Look at how we calculate the discount. This is how we calculate the discount, 4% cash discount. 4 divided by 100 multiplied by the invoice price. That will give us what? That will give us 80. Then the what? The invoice price minus the discount of 80, that will give us 1,920. And you've paid half of it. So you are going to say 1,920 divided by what? Divided by 2. All right. So that is that. Then we have January 4, purchase furniture for how much? 200,000, and computer for what? For 250. By what? By check. So that means that you purchase what? Furniture 200,000, computer what? 250. So, and don't say because it is what? It is the same date, you are going to add the two together. No, don't add the two together. You have to separate it. You can only add transactions together if they have the same characteristics. Furniture is different from what? Furniture is different from computer. All right, furniture is different from what? Furniture is different from computer. So you don't say that both of them are what? Both of them are asset. No, you don't do that. You don't say because both of them are asset, then you say 200 plus what? 250. No, you have to what? You have to separate it. You can only aggregate items that have the same characteristics. They are both assets, but they are different. Furniture is different from what? From computer. January what? January 4. So you are not going to what? You are not going to add everything together. You're only going to add them if they have the same what? If they have the same characteristics. All right. So you can go here now and say what? On the what? On the 4 now. Sorry. On the 4. I'm going to say furniture. Then on the same date as well, on the 4 as well, you're going to say what? Computer. So you are going to what? You are going to separate it. They are both what? They are both, we made the payment from our what? From our bank. So furniture is what? Furniture is how much? We have to what? We have to check that. Furniture is how much? Furniture is 200. Computer is what? Computer is 250. 200, 250. So 200,000. Then we also have what? 250. So that is that. It's a simple work. And why are we still putting it in the bank? It's because the payment was made by what? The payment was made from the bank. You can see now purchase what? 200, and computer by what? By check. And I have informed you, once there anything by check, we are referring to the what? To the bank. All right. If money is going out, you credit it. All right. If money is going out, you credit. If we are making sales, if our customer is paying, you debit. All right. On January what now? On January 6th, conducted a sales promotion for 1 month that give customer opportunity to enjoy a cash discount and a trade discount as follows. All sales with what? With full cash payment will be given how many percent? 5% discount. Full payment. Full payment. You enjoy what? You buy and you pay. They're going to give you a cash payment, a cash discount of how much? 5%. And all sales above what? All sales above 500,000 will qualify for a what? For a trade discount of how much? A trade discount of 10%. All right, that's the condition. Then we are now told now that sold goods for cash to Sandra Limited for what? For 340,000. So you have to, it's sold goods, so that means that for cash. So tell me that Sandra's is what they are paying by cash. There's a full payment now. So that means that this particular organization is going to enjoy what? Is it going to enjoy trade discounts? Ask yourself. On January what? On January 8th now, which type of discount are we going to record now? Is it trade discount or what? Cash discounts? This particular transaction now, does it qualify for what? Does it qualify for trade discount? It does not qualify for what? For trade discount. It only qualifies for what? For cash discount. Trade discount is above what? 500 what? 500,000. All right. So And we don't need to what? I think we need to calculate the what? We need to calculate the cash what? The cash. We need to calculate the cash discount. We need to calculate the cash discount. So let's be using this as our what? As our work file. So and that's on what? January what? January 8th. January what? January 8th. All right. So January what? January 8th. Full payment, you enjoy what? Full payment, you are going to enjoy a what? A cash discount. Full payment equal to what? Cash discount. So, and we are giving a cash discount of how many percent? 5%. So 5 divided by what? 100. Then you multiply with what? You multiply with the invoice, which is 340 what? 340,000. So 5 what? 5 divided by what? 100. Okay, let me check that. You also need to what? You also need to be having calculator by your side, please. Okay. From now on, majority of the things I will be doing is about what? It's to be about computation. All right. So please have your calculator beside you as well. So 5 divided by what? 5 divided by 100 multiplied by 340. That will give us what? That will give us 17 what? 17,000. That will give us 17,000. All right. So discount now is what? Discount now is 17,000. All right. So how much is it now going to, this customer is going to pay now? So we are going to say what? The 340 minus the what? The discount, which is 17. That will give us what? That will give us 323. All right. So now let's record what? Let's record it. No, we are making sales now. That means the money is what? Money is coming in, and that means our asset is what? Our asset is going to increase. And if your asset is increasing, what are you going to do? You are going to debit. So that's why we are having it on the what? On the debit side now. So on what date is on what? On the 8th. We just call it what? Sales, right? Sales. So we have a what? A discount of how much now? We are going to record a discount of 17,000 here. Okay. And how did he make the payment? You can see it is through the what? It's through cash, right? So just have what? 32. So that is that. So let's do what? Let's continue. I hope you all get this. Discount of what? 17. How do we calculate the discount of what? 17? You can see this how we calculate it already. Cash discount. It only qualify for what? For cash discount, not what? Trade discount. Trade discount is above what? Trade discount is above 500 sales, 500,000 sales. All right. So on what? On the 10 now, sold goods to what? To Miles and Stone for what? For 1 million. Who paid what? 75% of the what? Of the amount by what? By check. So you can see now in this particular transaction now, it qualifies for what? Please ask yourself. Does it qualify for cash discount? Does it qualify for what? For trade discounts? Think of it. The instruction is what is clearly stated. In this question now, it only qualifies for what? For trade discount. Which is a what? A sales of what? 500,000. And this particular sales now is what? Is 1 million. And he pays 75% of it. So this one, for you to qualify for what? For cash discount, it must be a what? It must be full payment. It must be what? Full payment. So let's now what? You can see it is clear now. So let's now, and okay, don't worry. When I get there, I'm going to say it. So this on what? January 8th. I can open another one for what? For January what? And this one is on what? On the 10th, right? Okay. So this is what? This is January 10. January 10 only qualify for what? It only qualify for trade what? It only qualify for trade discount. And how are you going to calculate it? It's already clearly stated that is what it is. Trade discount is how many percent? Trade discount is allocated. Trade discount is what is 10%. Cash discount is what is 5%. All right. So trade discount is going to be what 10 divided by what 100. Then we are going to multiply with what with the invoice price, which is what 1 million. All right, and that will give us what? That will automatically give us 100,000. All right. So we are now going to say what now? So therefore, 100 what? No, 1 million minus the what? Minus the discount 100,000. Equal to what? It's going to be 9 what? 900,000. All right. And we are now told now that you made a what? You made a payment of what? You made a payment of 75 what? 75%. So customer what now? Okay, let's say what payment now. Payment, you only made a payment of how much? You only made a payment of 75. So it's going to be 75 divided by what? Divided by 100, multiplied by what? Multiplied by 900,000. All right. And that will not be how much? That will be 675. What? That will be 675,000. So this is the amount that the customer is going to what is going to make to the what to the bank now, and that's what we are going to what. That is what we are going to record. So let's go back to our solution. So on the what now? We have on the 10, right? This will be on the what? On the 10. And this is what? And you know, let me look at something. I said it's paid 75. So you know that means that he has not yet what? He has not yet paid in full. So he's still owing the organization. So I will just call it what? I will just call it trade what? So let me just call it trade. We are going to call it trade receivable because he's still owing us. Trade what? Trade receivable. Then you are going to what? You write the name, which is what? Mines and what? Mines and stone. All right. So you are going to, and he paid through the what? He paid through the bank, right? So you are going to have bank here, 6 what? 675 1 2 3. So, and I informed you earlier that you are not going to say what now trade discount. You're not going to come in and say trade discount of what 100,000. We don't record what we don't record trade discount. All right. We can only record what cash discount. We don't record what trade discount. Please don't forget that. So you will not say, oh, 100 what 100,000. No. You won't what you won't say that. All right. So let's move on. Have it at the back of your mind. Don't record what you don't record trade what trade discount. So that's on what on 10. 12 now. Bobby purchased goods. Bobby purchased goods value at what 100,000 from Mr. Wally and paid full by what? By cash. And pay full by what? By cash. And pay full by what? By cash. Bobby. So Bobby, who is Bobby and who is Mr. Wally? Okay, Mr. Wally is the what? Mr. Wally is the owner of the what? Is the owner of the business. So that means our customer name is what? Is Bobby. All right. So and look at this transaction. Now, what does it qualify for? It qualify for what? It qualify for what? Ask yourself. Does it qualify for trade discount or a cash discount? It qualify for what? For cash discount. And it say what? Paid full by what? By cash. So you qualify for what? For cash discount. All right. So that's on what now? Was on the date is what? That's on the 12, right? So we can calculate the what in you can calculate the discount here on the what now on the 12. So on the 12 now. Our cash discount, which is what 5 divided by what 5 divided by 100 multiplied by what I think is 100,000, right? And that will give us how many percent? That will give us 5,000. So that means that the payment now to now be what? 100,000 minus what? Minus 5,000. So that would be what? That would be 95. What? That would be 95,000. So that's it. So we are not going to have what now? So we are going to say what? That is on the 12, right? On the 12 sales. 12 sales, right? You can say I'm not calling it what? I'm not calling it receivable because he has paid in what? Full. It's not what? It's not owing the organization. So discount of how much? Discount of 5,000. Then he paid by what? By cash, right? Pay by cash of what? 95. Up 95,000. So that's it. The next date. The next deposited what? Deposited the sum of what? 300,000. Deposited what? The sum of what? Deposited the sum of 300 what? That's on the 13th. Deposited the sum of 300,000 in the what? In the safe. In the safe to the what? To the bank. Deposited the sum of cash of how much? 300. And let me tell you something now. This is now what we call what? Contra entry. I've been waiting for it. Deposited the sum of what? So that means that what are we doing now? Is that we are what? We are crediting the what? We are crediting the cash and debiting who? And we are debiting bank. We are taking the money out of our cash and we are taking it to the bank. So that means our what? Our cash is what? Is reducing now. Our bank is doing what? Our bank is increasing. So here now we are crediting what? We are crediting cash and debiting what? Debiting bank. That is what we call what? Contra entry. All right. So 13. We'll call it cash. Then I'll also come here and say what on the 13 as well. Then we are going to call it what? We are going to call it bank. So credit the cash account of how much? 300. And the money is coming here. It's coming to the bank. 300. All right. So in the field, just write what? Just write C. Here as well, you can write what? C. It signifies that is a word. It is a contra. All right. Or let me put it in yellow. So that is that. You can see it's just what you take the word from cash and you take it to the what? You take it to the bank. As simple as that. That is what we call what? Contra entry. Paid salary by what? By check and electricity. Paid salary by what? By check of 80,000 and electricity bill by what? By 10,000. So by check, so that means that the means of payment now is through the what? Is through the check, all right? Electricity and what? Salary. So you don't match them together. You separate it. Salary is different from what? Electricity. On January what? January 15. You are making payments, so that means the money is going out. Have we? 15. And we also have what? 15 as well. So we are going to have our what? Our salary. Then we also have what? And we're also going to have electricity as well. So electricity is how much? Electricity, paid salary, 80 what? 80, 10. Electricity, 10,000. Electricity, 10,000. And it's by check. So that means that is what is through the bank. So 10,000. And we also have what? 80 what? 80,000. So it's as simple as that. So just classify it. How is the payment? It's still, and the entry is still the same. We are still crediting it. So, but how are you crediting the cash or are you crediting the bank? So if the payment is through the bank, you credit the bank. If it is through the what, the cash, you credit the cash as well. All right. So he paid the sum of what 1.5 million to Malam Tanko for what by cash for the what for the van. So Malam Tanko that you purchased a certain item from him in the what in the previous. So now you are not doing what now? You are making the payment. So that's on what on the 20, right? So I'll say come here and say what on the 20. 20. So just write what? Write the name of the what? It's already at the top. Yeah, Malam Tanko. You're supposed to have OA as well. So, and how do you make the payment? You make the payment via the what? Via the bank as well, which is what 1,750,000. All right, so that's fine. Mr. Wiley withdraw what? Withdraw cash for what? Mr. Wiley withdraw cash of 10,000 naira to pay for some of his personal what expenses. This is what we call drawing, right? This is what the owner drawing. How did he what? How did he it is through what cash, right? So that means that what no money is going out now, but we are withdrawing, but the withdrawing is in what form? Is it through the bank or is through the what the cash? Now it is through the what is through the cash now. So I'm going to go to the work file now and say what on the what date. Sorry, let me check the date again. That was on the 27th. On the 27th. So we have 20 what we have 27. Let's call it what drawing. Which is what is through cash, right? Which is what 10,000. All right, that's fine. So what else again? And cash sales of what 40,000 was what was made. Cash sales of what 40,000 was made. So this also was the condition is what for you to enjoy cash discount, full payment, Abby. So that means that this particular last transaction also qualified for what? Also fully qualify for cash sales. So let's just do the working here. That's on the what? That's on the 30. All right. So it is what cash discount. Cash discount is what cash discount is just 5. Then multiply by what? Multiply by 40,000. And that will give us what? That will give us 2,000 naira. So to now be what 40 minus what 2, which we are going to have what 38, what 38,000. All right. Then okay, so let's record it now. And the what on the 30. And this is what this is the last transaction saves cash, right? So cash is what 38,000. And we have a discount of what? We have the discount of 2,000. So and that is the end of the what? That's the end of the what the transaction. So the next thing that we just need to do now is to what is to balance it. So let me just what. So this is what this is the total of the what the cash. Do this as well. We have this. So and you know that the two side must be what the two side must be the same. So but that will not be for what for discount. Okay. Let me put it here. So hold on now. Let me check what. Let me do it very easy for you. So what you are going to do now, just okay, sorry. Add this up. You know how we do the balancing. Just hold on here. The cash as well. Just add everything here. So you can see now. Let me bring this down. Let me bring it down to this. That these two sides must be what must be the same. So I'm going to have this here. So let me say this. And for the what for the bank as well, they have to be the word, they have to be the same thing. And this, this is what asset account. All right. So we expect we expect the debit side to be greater than the word to be greater than the credit side. All right. So the difference now, that's now what we are going to call our what. So I will not say what balance what now. So can I say balance CD mean balance carried down? And how are you going to get this balance carried down? The total of the debit side is what is 456 now. So if you since you have what 456 now, then as what as cash, right? So 456 now to get the difference now, it now be 456 here minus the what minus the total that you have what minus the total that you have here, and that will give you what 146. To get the balance CD here as well, you are going to say the total is this, right? Then you less this. So, but for what for discount, there's no need. Just bring the final number down. You don't balance it. All right. So this, but you see this particular one. I like this. It's not necessary that you're going to that you do it like this. You can just use your calculator, add the debit side first, less the credit side, whatever you have, it will be it will be the balance. So rather than putting it here, all right. So this one is just for knowledge sake. You may not really do it like this in when you're solving what question. So whatever you're not going to come here as well and say balance all asset account must have all asset account must have a debit balance. So the balance that you have here now, you are going to bring it down here as well. So this for cash, right? Then you also bring here as well. So that is that. All right. So that's the end of that's the end of three column cash book. I'm sorry. So that's that. So this is it's a very simple stuff. So what you just need to try as much as possible to do is to recognize recognize the transaction and do the and do the debit and the credit. And one of the things that you also need to ask ourselves, in the previous class that we're doing cash book. We are just what do we do? But then we maintain a separate ledger for bank, and we also maintain a separate ledger for bank as well. All right. So but here now you can see we are it's just like we are merging the two together. So it is it's a very simple task. So that's that is the false requirement. That's the false requirement. So let me not play around let me play around the second the second requirement, which is now to post into into the ledger as well. To post into into the ledger. All right, so let's do this as well. Let's do this as well. Let's post in the ledger now. So and I'm going to be using this to do the writing part. So now we have to start this. We have to see we are starting the question all over again. So we are through with the two column. I'm sorry, the three columns. So now the second requirement, which is now for what do we call this? Is to do is to record in ledger. All right. So now the first one is to they say Mr. Wally Mr. Wally commenced business as as a sole trader with 10 million which paid into into the bank. So first of all, that is what we call the capital. That is what the owner is that is what the owner is bringing in. That is what the owner is bringing in now. So let me maintain a file now for capital. So I'm just going to say now capital. So capital what now? Capital accounts. So our credit and our what? And our debit as well. Your what unit of measurement and your what? Your unit of what? Your measurement as well. So this is what this capital account. So and you are introducing what? You are introducing money which is on what? On January what? 1, 20 what? 2016. So when you are introducing the money, you are introducing the money as capital and you paid it into the what? Into the bank. So write what? Bank here, and which is what? 10 million. All right, so that's it. And throughout this word, throughout this question, we did not come across what anywhere that you introduced an additional what additional capital. So we are going to balance the word, we are going to balance the account straightforward, which is going to be what? Underline it twice, underline it twice, underline it twice. And it's a word, these are what capital form part of what? Capital form part of equity. Capital form part of what? Equity. So it's going to have a what? A credit balance. So you're going to say what? Balance what now? Balance brought down, which is how much? 10 million. So that's all about what? The capital account. Then he purchased a what? He purchased a van of what? 6 million from what? Malam Tanko, and paid half of the amount due by what? Due by check. So you make the what? You make the payment through what? You make the payment. You purchase a what? A motor what? A motor van now, which is how much? 6 million naira. So first of all, I'm going to have a what? I'm going to have a ledger for what? For motor what? For motor van now. I'm going to have it. And this is the only motor van that we have during the what? Because this is the question that we just finished to prepare what? 2-column what now? The 3-column cash book. So this motor van, it is asset, and all asset account will have what balance? All asset account will have a what? All asset account will have a debit to what? It will have a debit balance. All right. So you purchase from what? On what date? I think that's on the 2, right? So you just write the name Tanko, which is what the cost is what? 6 million. And you see what balance was. Are going to balance the account straightforward because this is the only motor van that you purchase. The line is so all asset account will have what balance? They'll have a debit balance. So balance what? Balance brought down is now what now? So and that's the end of what? That's the end of that. So the next what? The next day he paid what? So another thing that we need to do first before we even go further is that let's maintain what Mr. Tanko account, and is a what is a payable because we are owing the trade payable. So I can say what payable. Say what payable, and we are going to make mention of the name because you can have many payable. Okay. Say what? Malam Tanko. This is a what? This is a liability what? This is a liability account. So your debit side and your what? And your credit as well. So you have debit motor van account. You have debit motor van account. So you are going to credit this one, which is on the 2, right? 2/1/16. Motor van is that much? 6 million. 6 million. And they have paid how much? They have paid on the same date, they have paid, which is 2-1 as well. They have paid by the word through the bank. They have paid 3 million. So that means that the balance, okay, let's still leave it because he has made the payment at the end of the what? I think he has made the payment at the end of the day as well. So let's leave that for the next one. Paid what? Rent of 500,000 for 2 years in advance for business what? For business premises by check. So that means that he paid what? He paid rent. So we are going to have another what? We are going to have another ledger for what? For rent. We are going to have another ledger for what? For rent. So I'm going to say what? Rent now. Rent account. Your credit side, your debit, your unit of what? Okay, let's bring it's okay. A unit of measurement, whatever the currency is, make sure you what? Make sure you use it. So rent, no, rent is a word. Rent is an expenses word. Expenses account, right? Rent is an expenses account. So how do you what? How do you make the payment? That's another thing that we need to look at. He paid a rent of 500 for 2 years for what? By what? By check. By check. So that was on the second as well. So the money is coming from the bank account, right? Which is how much? Which is 500 what? 500,000. Then you're going to have, there's no anywhere in the question that show that you paid another rent again. So balance what? Say 500,000 as well. Then you're going to have what? Balance what? Balance brought down of what? 500 what? 500,000. All right. So that is all about what the rent account. Then the next day, it say purchase goods worth how much? Purchase goods worth 2 million from what? Granule Limited and paid half of the what? Half of the amount by check so as to enjoy a discount of what? So you purchase goods from someone and you paid half. So that means that you have not paid all. So that is what we call what is also a payable as well. So I can let me maintain his ledger here and say what? Trade payable. Trade payable, and you need to write the name of the company. Debit, and you put your credit side as well. Okay. So you purchase, right? Purchase is going to be where? Purchase what goods. Say what purchase, because you are going to debit purchase account with how much? Because purchase account is an expenses account. It is 2 million. Then you paid what? We are told that you receive a discount. I think we have calculated the discount already. Now let me just check here. We have calculated the discount. And the discount is how much? The discount is what you can see. The discount is 80 what? The discount is 80 what? Thousand. Discount is what? Is 80 what? 80,000 naira. So, and no, if your liability account is increasing, you credit. If it is reducing it, you are going to debit. So that discount now is going to reduce your what? It's going to reduce your liability. And anything that will reduce your liability, if you want to reduce a liability account, what are you going to do? You are going to debit it. So the discount now that you receive, it will be what? It will be debited. We are going to say what? Discount now. Of what? 80,000. And you made a what? A payment from the what? You made a payment from the bank which is what 960 960,000. So, and we can balance this account because there's no anywhere again that we have any information relating to this particular suppliers. So 2 million, close the account, close the account. Then you now need to look for the balance now, which is what you are going to have a credit balance. All liability account is going to have what balance? All liability account is going to have a credit balance. So I'm going to have my balance here. I'm going to have balance CD here, and this place will now be brought down. So write your 2 million as well. Okay. So what's now? You say 2 million minus what? Minus 80,000 minus what? 960,000. That will also give you what? 960 as well. So you bring down here as well and say what? 960. So that is that about that particular what? For this particular posting. Okay, let's move on to the what? Let's move on to the next date. Let's move on to the next day. On January 4, purchase was furniture 200 and motor computer 250. By what? By check. Furniture and what? Computer. Furnitures and what? Computer. Furniture 200,000, computer was 250. So let's maintain the account for both now. So let me change the color a little bit. We have what? Furniture. Furniture account. Credit. And this is the only furniture that I buy during the year as well. So, and furniture is how much? Furniture is, and you made the payment by check, right? So your bank, which is what? Furniture is 200, what? 200,000. If your asset account is increasing, what are you going to do? If your asset account is increasing, you debit. So, and all asset account will have what balance? Asset account is going to have 200 what? 200,000. Asset account is going to have a debit balance. So you're going to see what now? Balance what? Balance brought down over much of 200 what? 200,000. Then you also have what? Computer, right? So your debit and your what? And your credit. And computer is what? Computer is 250. So you're going to say what? You make the payment from the bank as well. 250 what? And you say what? Your balance what? Balance CD, it will also be what? 250,000. Then you close the account, Then you see what? Balance brought down because it's asset account. Asset account will have what balance? Asset account is going to have a debit balance. So you bring the 250,000 naira down as well. So let's go to the next date. Sold what? Sold goods. The next date, which is on January, sold goods for cash of how much? To Standard Limited of 340. No, we have calculated it already because there's a discount. How much are we going to record in the sales account? To be 32 and a discount as well. So let me open a sales now. Let me open a sales account. Sales what? Let me change the color. Sales what? Sales account. Sales what? Sales account. You know, sales is a word. Sales form part of what? Form part of income. So, and if your income, if your sales is increasing, you do what? If your sales is increasing, you are going to be crediting it. As you are making the sales, you credit sales, and you what? You debit the bank or the cash, debit the means of payment. So on, I think this one is on the 6th, right? 6/1, 16. The word is a cash sales, and the amount is what? Is 323,000. Because you can see it here. We have what? We have removed the word. What we are going to record in our sales account, it will be the word, it will be the net. It will be the net, which is this what we are going to record in our sales account. This kind is going to have its own what? Ledger. So the amount, the actual amount that we, not the actual price, it is will be the what? The net. The sales is what? Is 340, but if you remove discount, so what you are going to record in your sales now, it will be the net, which is what? 340 minus what? 17,000. That will give you what? 323,000. Then you cannot bring what? Cannot say what on the same what? 6/1 of what? 1, and you say what? Discount. Discount what? Allow. Let me, which is how much? 17 what? 17,000. So the what? The next day, sold goods to Miles and Stone for how much? For this, and paid 75 what? Paid 75% of it. So that means the actual amount, if you look at this now, I think we have the what? We have the this working here as well. You can see this on what? January 10 now, that you sold goods to Miles and Stone now for how much? You sold goods to Miles and what? Miles and Stone for 1 million, and you giving me what? A trade discount. So you are going to remove the what? The trade discount. So that means that the what? How much we are going to what? Record now? It will be what? 900,000. It will be what? 900,000. And we, in the book, we are not going to make any book of account for what? For trade discount. All right. So what we are going to record now, it will be the what? It will be the 900 what? It will be the 900,000. So we now need to go to what? Let's go to the sales account now. The sales account now, which is what? Miles and what? Which is on the 10, right? 10/1 of what? 16. M and X. So you are going to record what? 900,000. So you are not going to say what now? Discount allow, or discount allow of 100,000. No, you are not going to record what? You are not going to record trade discount. You only record what? Cash discount. All right. So the next date, on the 12th, Mr. Bobby purchased goods worth how much? 100,000 from Mr. Wale, and paid what? Full by what? By cash. And paid full. That's on the what? On the 12th. I think we have recorded in the what? Everything in our column card book, which is what? Bobby on the 12th, right? So that means that the sales now is what you are going to record it in what? As the actual cash that we receive. It is what? It is 95,000, and the discount of what? 5,000 naira. So we have a what now? On the 12th, 1 of what? 16. Sales, Abby. And is a what? Is a card sales of what? Of 95 what? 95,000. Then you are going to say on the same date as well, which is what? Discount what? Discount allowed to now be what? 5,000 what? 5,000 there. What sales do we what? And I think the last sales that we also recorded is the last one. Mr. Bobby deposited, pay salary. These are what expenses. Then we have the last one, pay the sum, withdraw, and the last one now. Made a cash sales of what a 40,000 naira was made. So, and you can see now this particular transaction now, it's qualified for what? It's qualified for what? It's qualified for cash discount. They only qualify for what? For cash discount. And we have what? We have recorded already. We have what? We have recorded already. So this cash sales is what? 88, and discount allowed is what? Is 2 what? Is 2,000 what? Is 2,000 naira. So which is on what? On the 30. 16 car sales, say what is 38. Then we also have what the same date, discount what allow of what 2,000. So that is all about the sales transaction that we are going to record in in the sales account. So what we now need to do now is to add everything, is to add everything. So, and it's a what? It's a sales account. Sales account is going to have what balance? It's going to have a debit balance. So you are going to say what balance BD. Then the balance CD that you have that you have here. There's no any what we don't have any information relating to, maybe there's a return inward, which we are still going to look at. So if we had all this, how much are we going to get? Let's point our calculator. 232,000, 17,000, 900,000, 95,000, 5,000, 28, 2,000. And that will give us we are also going to bring it down here. We are also going to bring it 38. Then you also bring it down as here as balance. Just see what 138. Okay, so it is all this balance now that we are not going to be taking when we are preparing our trial balance. All right, when we are preparing our trial balance. And before I leave, before we go to any other one, so let me prepare a discount allow account. Let's have a ledger for discount for discount allow. Let's have a ledger for discount allow. So we are going to have a discount discount allow account credit and and you know that discount allow is kind of expensive, so it's going to have what balance? It's going to have a debit balance. So whatever you can see now, we just need to be picking it off from sales account. We need to be is in what side here is in the credit side. The corresponding entry will not be what now? It will not be in the debit side. So on the 6th now, so we have 6, is it 6? Is it 6 or 8? On the what is on the 8th? On 8/1 from sales account, right? It's 17,000. Then where again you can see we have done the corresponding entry of this. We also have another one which is 5,000 naira. We also have another we also have another, we have recorded the 17,000. We also have we have 5,000, which is on 12, and we also have on the 30. 12. We also have on the 12 is on sales account as well. Which is we have 5,000, and we also have on the 31 as well, which is also from sales account of how much? of 2,000 what of 2,000 naira. Okay, so we can move on now. So that will be what now? That will be 24 what? That will be 24,000. And that will be what? That will be 24 what? That will be 24,000. So balance what? Balance CD 24 what? Then you also what? You bring it down as well. So as balance what? Balance brought down of 24 what? 24,000 naira. Okay, so there's that. Then let's look at what another one. Bobby, we have recorded, deposited the sum of what? Deposited the sum of deposited the sum of, okay, there's no need. Paid what? We can open a what? And you know now, let's even what? We need to open this guy account. Miles and Stone, because he only paid 75, so he has no what, he has not paid everything. We need to open his account now. We need to open his account because he's still what, he's still owing us. He's still what, he's still owing us. So we need to have his, and those that are owing the organization, we know we call it what, trade receivable. Those that are owing what, those that are owing the organization, we call it what, those that are owing the organization, we call it trade what, trade receivable. What's happening to my pen? Trade receivable, Miles and what? Miles and Stone. Credit and what? And debit. Is enough. So we know we made a what? We made a sales of how much? From sales account. Sales of 900 what? 900,000. And we are going to say what? Payment. You only made a payment of how much? You only made a payment of 675. 675,000. So that means that is owing us how much now? Everything still has to what? Everything still has to agree to what? To 900 what? To 900,000. Right? Everything has to be what? Both the debit and the credit side has to be the same. I know this is a receivable account. Receivable is a what? This is an asset account. And all asset accounts will have what balance? They will have a what? A debit balance. So you are going to say what? Balance CD here, which is the what? How much is left? 900,000 minus 675. So that means that it is left with what? 225. 225 what? So I'm going to have what? Balance what now? Balance brought down of what? Of 225 what thousand. That is about that. Deposited what? There's no need of this. But paid what? Salaries and salary. Okay, so let's now open another ledger for salaries and what? For salary and electricity. Salaries and what? Electricity. Let me maintain a new one for both two of them. Salaries and what? Salaries and electricity. So I'm going to have a what? Salary what? Salary account. Salary what? Salary account. It's okay. Our credit and our what and our debit side. And you know, salary is what? Salary is can expenses account. Can expenses what? Can expenses account. And all expenses, some no salaries can expenses account, and all expenses account will have what balance? They will have a what? A debit balance. You made a payment through the what? Through the bank. Which your salary is what? Is 80 what? Is 80,000 naira. So you're going to say what? Balance what? Balance CD, which is also going to be what? 80 what? 80,000 naira. So you're going to say what? Balance what? Balance brought down of what? Of 80,000 naira as well. As well. Then you also paid what? Electricity. Also going to have a what? A ledger for what? For electricity. You're going to electricity. Electricity was made by what? By bank as well. And which is that one is what? Is 10,000 naira. So balance what? Balance CD of how much? 10,000 naira. You close the what? You close the account. Electricity is an expenses account. And all expenses account will have what balance? All expenses account will have the what? A debit what? A debit balance. A debit and your what? And your credit. Then a unit of measurements, put the what? The currency sign. So that is that about for what? For salaries and what wages that you paid by what? That you paid by what? By check. And we also have another one. They say pay the sum of what? Okay. I mean that Malam what? Malam Tanko. So that means that you have paid what? You have paid Malam Tanko. And I think we have maintained a ledger for Malam Tanko for trade payable. Let's go back and check it. Okay, let me even do this one last 27. Withdrawing for personal use. Mr. Wiley withdraw cash of 10,000 naira for personal use. That's the word drawing. That's the word drawing. So let's have this. I think we have maintained what Malam Tanko. All right, so just say what drawing. And drawing is an expense. You withdraw cash of how much? Withdraw cash of 10,000. Drawing is an expenses. What 10,000? Then you bring it down as well. Balance what? Balance brought down of what? Of 10,000. So that is that. So let's now check the account of Malam Tanko. Do we open account for what? This is receivable. We have a trade payable and trade payable. Okay, Malam Tanko. All right. So this is what? Malam Tanko what? Malam Tanko account. And we have what? We have made the what? We have made the payment now. Malam Tanko account. We have a what? A 6 million motor vehicle. We paid what? So, and out of what? 6 million as well. On what date? On what date? On 20 paid what? 1.75. Paid 1.75. So on the what? On the 20. And you know, if your what? If your liability is reducing, what are you going to do? You paid by bank as well. If your liability is reducing, you what? You debit. If your liability is reducing, you what? You if your liability account is what is reducing, debit. If asset account is what is reducing, you credit. So our liability is reducing now with Malam Tanko. So, and this is the end of it. The liability account, all liability accounts will have what balance? They will have a what? They will have a credit what? All liability accounts will have a credit balance. So we need to look for the what? For the balance CD now. That we are now going to what? Brought down here as what balance brought down. So 6 million minus 3 million minus what? And that will be 1 what? 1 to 15. So, and that is what? That's the end of it. That's what? That's the end of it. That's the end of it. All right. So there's no, and we also what we can also see that we also receive what we also receive a discount. So the last ledger that we need to have now is to call what do we call this? Discount receive. We also receive a discount of what? We also receive a discount of 80 what? 80,000 naira. And who do we receive this discount of 80,000 naira from, sir? We receive this discount from what? On Grinders Limited. That's on what? On the third, right? On the third, we receive a discount of what? And let's go back to the transaction. Okay, this is where we what? This is where we receive the discount, a cash discount of 4%. So the last ledger now is to what? Is to discount what? Discount receive. Discount what? Discount receive account. Okay, let me maintain it here. It's very short. Have what? Discount what? Discount receive. Discount receive. Your credit side and your what? Your debit. And you know, discount what? Discount receive is what? Discount receive is like income. We usually credit the what? We credit a P or L. So that means that's going to have what balance is going to have a credit balance. All right. So we enjoy it from what? Granules Limited, right? Which is what? 80,000. So close your account. The currency that you are using, whatever the currency is, which is Ghanaian CD, whatever the currency, make sure you what? Make sure you put it there. So your balance was balance CD is also going to be what? 80,000. So the last one is to say what balance brought down, which is also what? 80,000 naira. So this is the end of what? This is the end of the what? Entering the transaction in what? In ledger. So the final thing now that we need to do now, you see all those balance, we now need to what? To bring it up now so that we're able to prepare what? A trial balance. We need to prepare what? A trial balance. So the final page now, I hope this particular page is going to contain is to prepare what? Is to prepare a trial balance. Always what? Write the name of the company, which is what we don't know here, but we know the owner, which is what? Mr. Wiley. Say what? Trial balance. Trial balance. As at what? As at 31st December. No, sorry, as at 31st of what? It was of January 2016. Put your what? Your debit and your what? And your credit side as well. Maintain your what? Your unit of measurement, the naira sign, whatever the currency sign is. So you now need to be what? We need to be going back now. And let's first of all take care of the word, the cash and bank. I think we have the balance here already. You can see the balance, just bring the word, the balance of cash and what bank straight 146 and 422. So that's the what the balance that you're going to take out to your what? To your ledger or to your trial balance. The balance brought down. So we have what? Bank. Bank is what? Is asset. All asset accounts will have what balance? It's going to have a debit balance. So you bring it down here as what? Bank for. Then you also have another one called what? Cash, which is what? 146 what? 146,000. So you also have what? Then we now need to be going back to the what? To all the transaction now. We now need to be going back, starting from the what? From the first one. Starting from the first one, you need to be bringing the what? The balance. You have capital now. Capital of how much? Capital of 10 million. You have capital of 10 million and motor vehicle. You can see the capital is in what side? You can see the capital is in what side? Is in credit side. So in the trial balance as well, I'm going to put it in the what? In the credit side. Motor vehicle have what balance? It have a debit balance, which is where you can see the 6 million here. In my trial balance now, I'm going to put it in what? I'm going to put it in the debit side as well. So let's go now. Sorry. So we have what? Capital. Capital of what? 10 million. Then we also have what? Motor what? Motor van of what? Of 6. Then we also need to be going what? We need to go back as well. We need to go back. Okay. Okay, let me be doing it like this. Okay, let's go back so that it will be very easy. Okay, we are done with capital and what? Motor van. The next one is what? Payable, which is Malam Tanko. What's the balance that we have? You can see the balance is what? And is in what side? We're having a balance brought down, right? On the what side? On the what? On the credit what? On the credit side. So in my try balance as well, I'm going to put it in the what? In the credit side. So let's go. Almost on, please. So we have what now? We have trade what? Trade payable, which is what? Malam Tanko. All right, so that is that. So we also need to what? We also need to go back again. We also need to go back. Malam Tanko, we are done with that. Then we also need to say what? Trade payable. We also have this guy, and trade payable. You can see another suppliers that we are here to pay fully of 960,000. Then we also have rent of 500,000. So we have 960 and what? 960 and what? 500. 960 and what? And 500. So we have what? Rent. Rent is what? Rent is kind of expenses of what? 500,000. Then we also have what? Trade what? Another trade payable of what? Granos Ltd, which is what? 960,000. All right. Still goes almost done. Just it is what? So we are through with this now. Then the next one, we also have what? Furniture and computer. Furniture and what? Computer, 200 to 50. 200 to 50. Okay. Furnitures and what? Computer, 200 to 50. Furniture. We have furniture. Furniture is what? 200,000 is assets. And we also have what? Computer. Computer is what? 250 what? 250,000. And let's go again. Go again, pick up another two. We have sales. You can see this sales. I think is there anyone else? We're done with furniture and computer. Sales 1.38. Sales 1.38. Sales. Sales. And sales have what balance? It have what? A credit balance. So it's going to be what? It's going to be here. 380. I think we also have another one called what? Discount what? That we just finished now. Discount allow. Discount allow is what? Is 24,000. I see it along the way. We also have discount receive of what? 80, drawing 10, and we're taking it like this. Discount what? Discount receive. Discount receive of what? Discount receive of 80 what? 80,000. We also have drawing as well. Drawing is what? Drawing is expenses, 10,000. Okay. We have salary, electricity. Salary, electricity. Salary is what? 80,000. Electricity as well. This is what? So use this salary, use that. Trade receivable, trade receivable. You can see on the result, the balance is on what side? The balance is on the debit side of it. So you're going to put it in the debit side of your trial balance as well. So trade receivable is asset. Trade what? Trade receivable. And which is what? Mines and what? Mines and stone. And they are owing us what? 2 to 5,000. So we have used what? We have used everything as well. Okay, so that is why. Let me check the what question again. And another one that we also have, we purchase what 2 million, Abi? So which we have not what we have not recorded this. I think there's no way where we have the what purchase account. Anywhere that we have a purchase account. Purchase. So let me just purchase. No, there's no purchase. And we purchase what 2 million. It is as a result of the purchase that we enjoy the what a discount. So you can say what purchase, and purchase is what? Purchase is expenses, right? So purchase is what is expenses. Expenses is going to have what balance? Expenses is going to have a what? A debit what? A debit balance. So purchase of how much? Purchase of 2 million. Purchase of what? 2 million. So that's the end of what? That's the end of everything. So the two side, in what? In the credit side now, what do we just have? We have how many items? We have 80,000. We have what? 1.38. We have what? 960,000. We have what? 250, and we also have what? 10 million. So let's add this forth. We really have what? How many items? Just what? Just 5. 10 million plus 2.5 plus 960 plus 1.38 plus 80 as well. So these are the only 5. And if you had all the what? If you had everything, it will give you what? 1367 what? 670,000. And this side as well to give you what? 13 what? 670 what? So you can see the trial balance was the trial balance agree. The trial balance was the trial balance agree. It's going to agree. So, but there's another topic that we're still going to talk about is when the trial balance does not agree. So if the trial balance does not balance, meaning that what you're having a different you're having a different number in the debit and the credit is as a result of what? Error in your ledger. So that means that we have made mistake when we are entering all this ledger. All right. So please don't forget all this balance now. That's why those are the things that we are putting it in the what and in the trial balance. Like drawing now, if you check in the trial balance, you are going to see what? 10,000 naira in the debit side. Discount receipt, if you check the trial balance on the credit side, you are going to see what? 80,000 naira. All right. Your salary as well. If you check the trial balance, you are going to see 80,000 naira in the debit side of the trial balance. Electricity, if you check the trial balance, you see 10,000 naira as well in the debit side. If you check the trial balance as well, you see what? Receivable of what? 225. If you check the trial balance again, you are going to see what in the debit side, you are going to see what 24,000 naira in the debit side. If you check the trial balance in the credit side as well, you see what 1,380,000 naira in the credit side of the trial balance as what as sales. If you check the debit side of the trial balance, you see what 200,000, and you also see what 250,000 naira. Then you see rent as well of what 500,000. Then you also see trade payable, which is a liability of what 960,000. If you check the trial balance again, you're also going to see this word. You're also going to see this particular amount in the credit side as well. If you check your trial balance as well, you also see this in the credit side. Then you also see this in your debit side. So if our ledger is correct, our trial balance is also going to be correct as well. Okay. So that's the end of what that is the end of it. That's the end of this particular wonderful question. All right, so let me make a brief recap. Don't forget, in the trial balance we have we have debit, and we also have what credit. Your assets, you are going to do what you debit it. Your expenses, you're also going to do what expenses as well, you're also going to debit it. Your liability, you are going to do what credit them. Your income, as well to fall in the credit side. Your equity, will also form part of your what. So both whatever you have at the credit must also equal with what you have in the debit as well. All right. So that is it. Don't forget that. And thank you very much, and God bless you all. If you have any question at any time, please make sure you put it in the group chat. You can message me on you can message me on WhatsApp at any time. This is my number as well, 3 54. You contact ICAN online at any time. So this is my WhatsApp contact at any time that you can watch. If there's any area that you require further clarification. So thank you very much, and God bless you all. All right. This is a very important. Revise it as much as you can. If there's any question at any time, let us know. And I pray by God's grace, every one of you is going to pass the course. So enjoy the rest of the day.